1st, 2022. It's August, 5 months to go in the year. September, October. Yeah, 4 months to Christmas. Oh, it's happening. Welcome one, welcome all. Nice to see you. It's your buddy Uncle Bruce live from Calgary, and all is well. Jen and I are nice to see you. It's you're fine, and we're alive and well. The weather here in Calgary has been hot for Calgary, not so hot for many of you in certain areas that you live in. I get it. Uh, our high today will be 86, and their Environment Canada is giving us a heat warning, 86. I know in the desert you are laughing, you laugh heartily, but it is what it is. Tomorrow high of 76, back to 84 on Wednesday. Thursday 74 for the high. Friday's high in Calgary 69 degrees. 79 Saturday, 84 Sunday, 85 next Monday, 82 next Tuesday, and 83 next Wednesday. So we're still going to hang around the 80s, but we're going to be hanging around the low 80s. And I can tell you that in the by the 15th of August to the 30th of August, we won't hit the 80s. So it'll be a miracle to get there. It will be in the 70s. So we're quickly coming out because the days are shortening up now here, unfortunately, as they do up north. And our sunset is still at 9:22, but it was at 9:48. So we are definitely, giving up some sunshine at the end of the day, and of course the sun takes longer to come up in the morning, and that will affect the weather for you guys wherever you are in the Southland, in the USA, in other parts of the world. It's hot, hot, hot. I noticed that Berlin was almost 100 yesterday. 100 in Berlin with humidity. That can't be good. Same with other European cities. Very hot. But we're good, and we're watching the markets this morning. We're as we always do. We're watching, noticing all kinds of corporate events going on. Noticing this morning that Apple has decided to raise some money through the bond market, which they do from time to time. And the folks at Apple are pretty good at figuring out when is the right time to raise money from the bond market. Now, those of you who don't follow me very regularly, or you're new to this channel, or you're watching this on the rerun and you're wondering, who is this guy? What's he talking about? Why would Apple need to raise money? These guys make all kinds of dough. They're cash flow positive, $120 billion. Why would they need to raise money? It's simple. Apple, the all-American company that they are, they have most of their cash that they've amassed over decades of making money now. It's all offshore. They don't bring money back to the United States, because if they did, of all the billions they have offshore, every dollar they bring back to America to their domestic bank account, they'd have to pay about a 31% tax rate on that money, U.S. taxes. And the tax man will not relent on foreign earnings of U.S. corporations. They want their pound of flesh. So on the one hand, the bad guy is Apple for not bringing money back and paying their taxes like other companies kind of do, but not really. The bad guy is the tax man for not allowing Apple to bring money back tax-free or at a lower rate. Keep hearing all this talk about a global 15% tax rate and a negotiated deal, and these countries just can't get their acts together. Anyway, so what Apple does is, instead of paying any taxes on this money, they pay taxes overseas where they do their business, but they amass vast amounts of money offshore in tax-free jurisdictions where their money is more than welcome to be parked. They they basically signal to their friends in Wall Street. Oh, and Apple has many, many friends in Wall Street. They indicate to their friends in Wall Street that they would like to borrow money against the money they have, and they'll use the money they're borrowing to pay dividends to investors and to buy back stock. And Wall Street loves doing this. Wall Street just lives for this because if you're a Wall Street banker and Apple says, "Hey, we want to raise 20 billion bucks or 30 billion dollars on a series of 2-year, 5-year, 10-year, 40-year bonds, whatever they are." And you talk to them and they talk to you, and it's agreed that your bank is going to raise 10 billion of the money they need, let's just suppose. What happens next? Well, you, the banker, will contact all of your pension fund clients, all the pension funds that you have, which are hundreds, thousands. You'll contact all the hedge funds that deal with you, which are thousands. You'll call all the ETFs. You'll call all the mutual funds, thousands and thousands and thousands. So the entire army of the bond department puts the word out that Apple is raising cash and we've got an allocation. Do you want any? And then what happens is the brokerage or the banker in New York gets orders for $30 billion worth of bonds, Apple bonds, but they only have 10 billion to hand out. And now the crying begins because now everybody gets allocated a third of what they want or some kind of percentage. And of course, Apple bonds never default. They always pay their interest payments on it. It's always great. So Apple gets their total amount of money from all their brokerage friends, okay? And they can now do what they want to do by paying out dividends and by buying back stock. Now, guess which brokerage firms Apple uses to buy back their stock with? I'll give you a couple of minutes, a couple of seconds. Think about it. I'll just think about this. Okay, you just helped Apple raise $10 billion, and they need to say use $1 billion of that for dividends, and $9 billion is to do stock buybacks. Do you think maybe your firm will get orders for $9 billion over the next 12 months to buy back Apple stock? Hello. Not only do you get a commission to issue the bonds, 1.5%, 2%, you also get a commission when you buy back the stock for Apple so that the stock certificates can be canceled and they keep the share float lower and lower and lower. And therefore, the share values stay higher and higher and higher. Everybody seems to be happy except for one party, one group, one entity in this whole thing is they're not like mad or anything. They're just not like as happy as everybody else because at the party we get the balloons and we got the cake and we got the champagne and we got the music and we're dancing to the music like Elaine does on Seinfeld. But there's one group of guys, girls in the corner. They're not really. They've been invited to the party, but they really don't feel welcome to the party. And who's that? The country of America, the United States of America, the tax department, specifically the IRS, the entity that if they could raise money from Apple would have to raise less money from the rest of Americans to balance the budget. But because Apple doesn't pay taxes in the United States, they pay very little. These billions of dollars that could be coming in are not coming into the U.S. Treasury, and so they're a little, they're down, But on the other side of it, people who get dividends, they have to pay tax on the dividends, and people who sell Apple stock for a profit, they have to pay a tax, a capital gain to sell stock at a profit. So the IRS gets something out of something somewhere sooner or later. And that Apple is a profitable company and has a lot of employees in the United States. They get a lot of income tax. And of course, Apple pays property taxes to Cupertino. They pay California taxes to California. I mean, they pay tax, but there's this block of money that is this massive wad of cash. It just isn't coming back. And so Apple does what they do. And so the brokerage guys in New York are just giddy. They're all giddy this morning. They're all excited. They're all on their phones and they're texting and the pension fund managers are going, oh, thankfully, I've got I can buy $10 million or $50 million of Apple bonds this morning for my $6 billion pension fund. I get to diversify my pension fund into quality corporate debt that always gets paid. The interest rate isn't 8%, unfortunately. It's 2.4, 2.6%, but it's 2.6% Apple money. It's Apple money. And so they take it. Now, while all that's going on, there's something else going on. Royal Caribbean, the cruise line, they are raising $900 million today, just short of $1 billion. They're rolling over old debt. From what I can gather so far, it looks like they have some debt that is maturing that they issued a couple of years ago when the pandemic took off, and they're replacing it with new debt. So when they raise money, in the case of the cruise lines, they just have to pay interest on the amount of money they borrow. And then at the end of the term, they have to pay off the entire balance of the loan. Well, what they do is they roll over the balance into another term loan. They just keep paying interest on it. They never pay off the balance. Well, at this point, they don't. And so 900 million is being rolled over. Now, it's possible that 500 million of that 900 million is actually a rollover, and that 400 million, less expenses to do the deal, is fresh cash for Royal Caribbean just to add to their balance sheet to, weather the storm of high fuel prices, crazy inflation, increased cost. Apparently, this deal is a convertible bond. They're referring to it as a convertible bond. Well, we don't know for sure. At least I couldn't see it right away. I couldn't find out the actual conversion. I might have it now. Just one second here. It's a private offering of $900 million of senior convertible bonds that mature in 2025. And they're going to give the purchasers an option to buy out another 135 million more than that. That's 15% more. And it's to replace some existing near-term maturities with new longer-term convertible bonds and matter non-dilutive to shareholders as described below. They're buying back 2.875 notes due November 15th, 2023, and 4.25 convertible notes payable June 15th, 2023. And then they're issuing these bonds, and I still don't see the conversion. I don't know what they're convertible into because they have not yet disclosed that information, or at least it's not in this press release. So that's what's going on at Royal Caribbean. Now, they're insisting that this will not in any way dilute the shareholders. That's what they're really trying to, let everyone know. Look, we're not going to dilute the shareholders. It's not going to happen. It's going to be fine. Everything's going to be great. Everyone's going to be happy. We're going to sing Kumbaya around the campfire later tonight. It's going to be fine. No issues here to worry about. Blah, de, blah, de, blah. Okay, well, if that's what you're saying, I don't know if this is even here. I'm now looking at another press release, something filing any. I can't find it. I can't find it. It's buried somewhere. If any of you out there find the actual conversion and it's of any interest to us, let us know. Okay, but at the end of the day, what's happening here is the continued need for capital continues. They're offering 900 million plus 135 million bonus on top of that, like optional. They're going to get that. They'll raise $1 billion, pay fees, roll out old debt, add cash to the balance sheet, and be more in debt than before. The question is, what will this bond cost them? We don't know what the interest rate is because Royal Caribbean will be told what the interest rate is once they figured out the interest level. Now, here's Here's a typical a Wall Street banker this morning. Okay, let's say I'm the banker. Okay, I call you up and you're a pension fund, and I say, hey, how's it going out there? Sell my house fast enough or Marlboro Computer Whiz. How you doing? I know you're sitting on billions of dollars of cash in your pension funds that you got to get working. I got a couple of deals for you. Oh, you do? Oh, what's going on? Well, Apple, they're looking to raise some money. Oh, Apple bonds. We got Apple bonds today. Oh, yeah. How many can we have and what will it pay? It's not even what will it pay? How many can we have? How many will you let us get? Oh, and by the way, how much will we be paid on it? That's how good Apple's bonds are. Okay, so we finished talking about Apple. Now I bring up the subject. I got another bond offering for, oh, what's that? I got Royal Caribbean. And they go, oh, how much are they paying? And how much do you want? Now, if I'm a smart banker, if I'm a smart Wall Street banker, and trust me, the guys and girls in Wall Street are offering all kinds of bonds all the time to their clients. And the clients are just as smart as the bankers are smart. They're just as smart, the guys and girls on both sides of this equation. And the pension fund people, the hedge fund people, the mutual fund people, everybody that gets called by the investment bank, they're just as smart as the other party, and they all know the same thing. In baseball, there are unwritten rules. Okay, you don't stand on Superman's cape. You don't pee into the wind. Okay, there are unwritten rules in hockey. There are unwritten rules in NFL football. There are certain things you don't do, even though it's not in the rule book. Okay, so when an investment banker calls you from the bond department at Goldman Sachs or JP Morgan or Bank of America or one of these huge companies, when they call to say, hey, what's happening? Did you have a good weekend? Hey, listen, we got some deals on the table today. I'm going to send you an email. I'm going to send you a text. You've seen some stuff on the wire. We're in on these deals, and the deals are Apple bonds, Royal Caribbean, and maybe 3 or 4 other deals. And it is an understood thing. Okay, it's understood that if I call you to offer you Apple bonds, and I offer you Royal Caribbean bonds, okay, the etiquette is you buy a little of each. You might not want the Royal Caribbean bonds all that much. You're not that crazy about them, but you'll buy the Royal Caribbean bonds. You'll take 5 million of those, and you'll take 100 million of Apple. You don't have to buy 10 million of Royal Caribbean to get 10 million Apple. You don't have to do that, because in Apple's case, the offering is 100 times the size or whatever, 10 times, 20 times bigger. It's huge. And you're lucky to get a call. You're fortunate that you even got a call. Now, if you're the California Teachers Pension Fund, you're not fortunate to get the phone call. You're going to get the phone call. Okay. But even the California Teachers Pension Fund will return the favor, because they got a call to be offered Apple bonds and Royal Caribbean, and they'll take a little of each one as a courtesy. But the Royal Caribbean bond, the Teachers Fund might only hold it for a week, 2 weeks. Now, I will say one more thing about this. It's possible that the California Teachers Fund can't buy the Royal Caribbean bond. They're not allowed to, because the Royal Caribbean bond is likely rated as junk. It's a junk bond. And the Teachers Pension Fund says the banker won't even offer the bond to them, because they know they can't buy it. Don't insult the buyer by trying to sell them something they're not allowed to buy in their charter, because the California Teachers Pension Fund is supposed to represent all teachers that are working and all teachers retired to safeguard their money, and they don't buy junk bonds. That's just not the thing. But I would call, as a Wall Street banker and bond seller, I would call hedge funds, and I would call ETFs, and I call a whole bunch of these guys and say, I know you guys are looking for high yield stuff and you're looking for quality stuff. I got a little of both for you today. I got some Apple for you and I got some Royal Caribbean for you. You want like 5 million Royal Caribbean and 20 million Apple? How about something like that? And we'd put a deal together. And this is what's going on as we are speaking. It has been going on all morning. And it might have been going on in the middle of the night because the rumor was out that this is coming. And so bond buyers, bond sellers have been very busy overnight and are busy all morning. And it's probably a done deal on all this stuff. It's all sold out. Now, why should you care about this? I want to give you a little heads up, okay? For those of you out there who say, Bruce, you are boring me, man. You are putting me to sleep with all this crap about corporate debt, junk bonds. I don't care. I just want to know if my GameStop's going to go up. That's all I care about. I just want to know if the economy is going to be better. I just want to know if the Dow will go up. I mean, stop talking about this other stuff. Why should I give a crap about this stuff? It doesn't mean anything to me. Well, I got news for you. It does mean something to you because there's only so much cash that is floating around out there. Cash is finite, not infinite. It's finite. There's only so much cash out there. And one group that the bankers in Wall Street are not calling today to try to sell them some bonds is a group known as the Fed. You heard of these guys? The guys who make the interest rates go up and down? The Fed is not buying bonds anymore. 2 years ago, this Apple bond thing was coming up. A third of it would be bought by the U.S. government, the Federal Reserve. The people of the United States of America would be buying a third of this stuff. Today, they're not buying any bonds. The United States is now offloading bonds. They are the quantitative easing. They are quantitative tightening. They're sellers of bonds that they've got. The United States government wants its money back. It had $9 trillion of debt in its possession. It now wants to offload that over several years. And so these bankers are not calling the government of the United States through the Fed saying, hey, you want some Apple bonds? No, they're not buyers. That's step one. Number two, because of that and because Apple is coming to the market to borrow billions of dollars, and now Royal Caribbean is coming in, this means that other entities out there will have to pay more for money if they want money. The reason is simple. There's less money available. Sure, every day, every week, every month, old bonds mature and they always pay interest, almost always. And these hedge funds and pension funds and mutual funds, the cash is always coming in, but they're always buying debt as well. They're always buying it and they're always getting debt paid. So they're rolling their money over too. But it gets to the point where certain entities that used to be able to borrow money at 1% or 1.5%, or right now, in theory, could order bonds. They could issue bonds now for 3.5%, 4.5%. Can't do that right now because Apple has come to the market with a huge offering. Royal Caribbean is wanting to raise money. XYZ, blah, 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 all these outfits. And governments are borrowing money to pay deficits, which means there's less money available for other entities. And one of them might affect you personally. And this is where I want to bring this to your attention. Some of you out there are sitting on mortgages that are coming up for renewal in the next year. You had a mortgage that you took out 4 years ago, had a 5-year term over a 25-year amortization or whatever. And at the end of the 5th year, you got to renegotiate the interest rate to be current. Well, the mortgage you got 4 years ago, whether you're in Canada, US, the UK, it doesn't matter where you are, anywhere in the planet, right? The mortgage you got 4 years ago, depending on where you are located, could have been from 1.5%, 1.25% to 3, 4, 5%. Well, today, mortgages are more expensive than they were 2 years ago, 3 years ago, 4 years ago. So we all know by watching the news of the Fed raising rates, it's going to cost more money to renew a mortgage, to get a mortgage. And so those of you out there who are sitting on a house that maybe you bought for $400,000 5 years ago. You put 100,000 down. You had a mortgage for the remainder. So it's $400,000 house. You had a $300,000 mortgage. You now have to renew your $300,000 mortgage. Now, some of you out there, in the past, over the years and years and years, you found a situation where maybe after not the first rollover, but the second rollover, 10 years into paying your mortgage, you still had, 10, 15 years to go to pay it off. The good news is that the house you bought way back when has gone up in value by 50%. And your banker, your mortgage lender is saying, hey, look, your house is worth, 150,000 more than what you paid for it. Do you want to borrow an extra 50 grand against your house and knock off your credit card bill and your car payment and help your kid with a student loan or, whatever? You can pull 50 grand out and we'll just renegotiate your mortgage and add 50 grand to the balance. We'll add 5 years to the term, and payment will be the same because interest rates are so low. You can borrow money for virtually nothing. And you can take this 50 grand now and take care of this payment, like get rid of the credit cards, get rid of the car payment, and your actual cost of living will go down. Instead of you paying what you're paying now, $1,800 a month to get by, you're going to be paying $1,400 a month or whatever the number is. This is commonly done. The problem now is with higher rates and the United States government not buying up these bonds, actually selling bonds and taking cash out of the system, there's less cash in the system. And now your banker might say to you, I can only renew your mortgage. I can't add 50,000 to it. Or they'll say, I can add 50,000 if you want. I can add 50,000 and help you knock off some debt. But it's going to run an extra percentage point because money wants more money. The money that's out there wants more money to rent it. To rent this money, you got to pay more in rental fees, interest. All of a sudden, it's affecting you. You don't even realize it. It's not like your banker's calling you saying, "Oh, that Apple deal, that Apple bond deal that happened today, that's going to cost you 0.5% more in your mortgage." You don't know that until it's time to go and discuss the mortgage, and then you realize, geez, things sure have changed. Like 5 years ago, they were giving away toaster ovens and they were giving away iPods, and you signed a mortgage 5 years ago. You got all kinds of freebies and deals and deferred this and cheap rates there. And now it's like they're doing me a favor. Yeah, they're doing you a favor because you better be a quality client or you're in trouble because your banker could, in theory, your mortgage holder is in the position to say, I can't renew your 5-year. I can't give you another 5-year renewal on your mortgage. The term is up. It's a 5-year deal. There's still 20 years to go on your mortgage. The balance outstanding is $280,000. You got to come up with 280 grand in 90 days. We're calling the mortgage. Now you got to find another mortgage company to take on your mortgage. And maybe your house has gone up in value. Maybe it went up last year nicely, but it came down this year because of the recession talk and everything else. All of a sudden you're scrambling. You're just, I didn't think I was in this position. I can't believe it. You might be able to renew it, but it might run you 1%, 2%, 3% more, or 4% or 5% more. All of a sudden, that's because money is getting tighter. And guys like Apple, these all-American companies, this guy right here, the all-American Cupertino company, Apple, that makes everything in China, practically, sells this worldwide and keeps all the profits offshore to not pay American taxes. They're borrowing money from Americans through American banks to pay dividends and buy back stock. Are they creating new jobs in the United States? No. Are they building a new factory with this money? Are they borrowing $10 billion to build the world's largest chip production plant somewhere in Texas or in Nevada, creating 20,000 American jobs? No, not a single job is being created with it. This is an accounting game to screw with the American taxman. The American taxman has been screwing with companies by trying to nail them 31% taxes to bring back the money. It's a war. It's a war, and it's legal, and it's It's all known. Everybody knows about it. It's not a secret. But at the end of the day, every one of you is paying for it. One way or the other, you're paying for it. It might be a car loan that might be a half a point higher because the company that wants to lend you the money to let you buy a car, they had to borrow money from the bond market at half a point more than what they thought they would 6 months ago because money is tighter now. Apple just took a chunk of that cash off the table. You're paying more for your car payment. RV, you're getting an RV loan, 20-year RV loan, 15-year RV loan, 12-year RV loan. Put down 10% on the RV, the fifth wheel, whatever. Finance the rest of the balance. Well, RV loans are going up by whatever percentage, but because money is tighter. No matter what it is you're borrowing for, it's getting higher. And this is what's going on. Now, is there something wrong with Apple doing this? Not really. It's the system. Is there something wrong with Royal Caribbean raising money to stay alive? No, they're preserving jobs. They're trying to keep their company going. But unfortunately, the system is such that it is so leveraged in every aspect of life. We are so leveraged in the Western world on credit, on capital. Sometimes cash is freely available. It's just everywhere, anyone can have it. And then there are times where cash is not available. It's not as freely available. It's tighter to get. And with inflation right now between 8, 9, and 10% or more, and interest rates rising and an economy cooling off, it's getting tighter. And those of you who are 45 and under don't understand, or you understand it, but you know what? You've never lived through this before. You've never had to deal with this before, where money is not available to be borrowed right now. You've never heard that term. You've never fathomed it could be in any way a problem. The other problem that's going on out there is the loss of value of the crypto market. There's a lot of capital that has evaporated into thin air because crypto was in the high 40s, 50, 60,000 range. Where we see Bitcoin where it is. There's a lot of money, probably trillions, but at least $1 trillion is not there anymore. And that money used to be in the system. That's out of the system too. And if we see more meltage of crypto, we see meltage of stock prices, we see meltage of real estate values, we see meltage of assets. That means cash has evaporated. Liquidity is evaporating. And if liquidity evaporates at too fast a pace in too many jurisdictions around the world, the U.S. could do just fine, but if everyone else is shrinking, America's got a problem. The cost of money will go up globally. And where are we seeing massive equity shrinkage right now, massive capital shrinkage, world concerning shrinkage? China. The hot market of China, where anyone here 45 and younger, your entire adult lives, you've been watching the numbers out of China, the so-called GDP numbers out of China. 6-8% growth in GDP year after year after year. Records, financial return records out of China every year. They make nothing but money. They have a communist government that controls everything you say and do, and they control all the levels of government underneath them. And they have people earning $1 an hour, 50 cents an hour, working 6 days a week, 12 hours a day. They have the cheapest labor to produce good old American product like this that we buy for $1,500, $1,000, $1,200. How much did you pay for your iPhone? Do you even know how much you pay for this? You don't even know. You have a plan. You don't know. You just pay so much a month. You don't care because you don't know. And the reality is all of the profits on this for Apple are made off of laborers that they will not pay in America, because an American to make this product, they have to be paid $20 an hour. Apple's not going to pay $20 an hour for laborers to make this. They're paying $1 an hour, if that. And it's the manufacturer in China that is the actual boss of these slaves. and Apple just has a contract for so much a unit. They don't care what you have to do to make it at that price. Just deliver the damn unit. Well, there it is. So as long as that's available, all is well. But here we go, kids. As money tightens up in every way we see it, and China now is in a meltdown from its own domestic real estate. People are stopping paying mortgages on condos that haven't been built yet, haven't been started yet. They're already making mortgage payments. Chinese are revolting. 34% of Chinese mortgages are in default. They are now not paying the payments. This is becoming a multi-trillion-dollar nightmare in China domestic. And the cities of China that are regulating their developments, all of the real estate developments, whether it's commercial or residential, they are in a nightmare scenario because what they do is they sell the land to allow developers to build, and then they get a tax on everything built. If the money isn't coming in the front door, the builders can't pay. And if the builders can't pay, the city doesn't get the dough, and the cities have to borrow money to stay alive. But Beijing tells the cities what you're allowed to borrow and what you're not. And right now, Beijing is not allowing these cities to borrow money to cover their deficits. And every time there's a COVID breakout and 1 million people have to be tested today or by Wednesday, that cost is paid by the city in which the testing is done. And right now, there are certain cities in China where testing is mandatory for all residents every 3 days. Think about that. You live in Cincinnati, Ohio. You living in Pittsburgh. You out in Philly over there. You living in LA. Can you imagine you having by law to go to a testing center every 3 days to get tested? Or you're going to jail because if you don't show up, the records show you didn't show up for your testing today. Guess who's knocking at your door at 2 in the morning? You don't want these guys knocking on your door at 2 in the morning. The kind of guys that knock on your door at 2 in the morning are not the ones you want knocking on your door. That China is having huge problems. A huge percentage of their GDP is being eaten alive by testing. Just the testing, let alone treating these people. It is ugly, absolutely ugly, absolute mess. In any event, there's an economic meltdown happening in China, and this is the world's second largest economy. And this is affecting what China imports to manufacture and then to re-export. And if China ain't buying, a lot of folks out there aren't bringing cash into their bottom line, which means they can't buy. And it just spreads out. And again, more cash evaporating out of the system. That's what's going on out there. It's a global issue. It's not just Apple bonds. It's not Royal Caribbean. It's a global issue on every level, from real estate defaults to corporate lack of activity to supply chain issues to COVID nightmares, instant shutdowns. And this market had a great month last month. July was the best month since 2020. Unfortunately, we're going to start this month with a little bit of a dip, nothing serious as it appears, but it's coming home to roost. And these economic indicators that we've been looking at are historical. They're back 30, 60, 90 days of activity. What we don't have at the moment are economic indicators showing us the next 30, 60, 90 days going forward. We have indications, we have people's sentiment, we have business sentiment, we have all that. But the reality on the ground is what we're wondering about. And this is where we have got to pay attention to this. And I can tell you there are analysts who don't want to do it because they don't like what they see. And there are certain firms out there that do not want you to be a seller. Which firms don't want you to sell stock? Oh, I know. Every bloody one of them. Every firm in Wall Street doesn't want you to sell stock. They never want you to sell stock. They only want you to buy stock, because if you buy stock, you depend on them to manage the stock. They want you to sign contracts to get 2-3% management fees out of you for all of your capital, and they want you to be happy with the 3-4% return, even though inflation will eat you alive at 12. And that's the game. The game is rigged so that they want you to keep buying. Never sell, never sell. Because as soon as one analyst says sell, Another analyst has to say sell. I mean, they can't not say it if this analyst reads the numbers and says, I got to tell you to sell this stock. It's way overvalued. If everyone says sell, guess what everyone does? At the same time, they sell. And if they all sell at the same time, it's a stampede of selling, and stocks go down faster than they go up. Wall Street never tells you to sell. And in the meantime, there's a lot of folks out there selling right now into the strength of this market. What is Apple doing this morning? They are selling. What is Apple selling? Bonds. Why are they selling bonds this morning and not a month ago? The reason, a month ago, the 10-year Treasury was 3.48%. Where's the U.S. Treasury right now? Oh, about 2 point something. Let's take a look at the old U.S. 10-year, 2.65%. You're Apple. You want to raise 10, 20, 30 billion dollars? Would you rather pay 3.48% interest, or would you rather pay 2.65 on billions of dollars of debt so you can buy back your stock and hand out a dividend? I'd rather pay 2.65. And so they're sellers right now. They're selling. No one else is telling you to sell. No one's telling you to sell. But guess who's selling? The number one public company in the world, selling. Wall Street never tells you so. Welcome to the show. What a happy time we're having here. Little Sheos, I can't pronounce it, but this is a new member. Thank you for becoming a new member of the channel. Chilling with Uncle Bruce member. Love it. Welcome aboard. Great to have you here. And thank you so much for joining me and this great family of viewers. Really appreciate it. We'll be going to member-only comments in a few minutes. Members only during market hours for sure. You want some good news? I got some good news for you. It's not all, bad news, but I got good news for you. And this came from a I would call this a very reliable source. This good news that I have for you came from a reliable source, and I thought I'd mention this to you today. Of all places, was out at a shopping mall yesterday with Auntie Jen and Jennifer Jr. Three of us were out at a mall, and Jennifer Jr. and Auntie Jen, they scored a wheelchair, and the two of them went shopping. And I'm in this gigantic shopping mall with these two. And the deal is, Daddy, you can do whatever you want. Mom and I are going shopping. And I'm going, great. I have to be part of this. This is great. Everybody is happy. Daddy gets to just walk around the mall, and the girls get to be girls. And it's all good. Well, guess where I went? I went walking on into a GameStop store. That's what I did. I saw the old GameStop store here in Calgary, and I went in for a little chat. I walked around the store, and I've noticed that on these top shelves, way up at the top of the store, there are all these Xbox, PlayStation 5 boxes, and a piece of paper in front of them with Xbox PlayStation 5 bundle, $749. I'm thinking, wow, they got the Xbox in stock here. Oh, that's something. I'm walking around. I come around to the middle of the store. In the middle of the store is an island, and that's where the staff sits. So they keep an eye on the customers and what's going on. And that's where they can take your money and stuff. And I come up to a guy who's, there's two of them, and there's a younger guy and an older guy. And I talk to the older guy. He's the manager. And he and I got along just famously because I told him about what I do. Oh, you're a YouTuber. He didn't know anything about Uncle Bruce. Oh, he does now. And I thought, oh, yeah, I talk about you guys all the time on my channel. I'm a YouTuber that talks about GameStop. I started talking about GameStop, back in 2020. And then 2021, I started going live and on and on. So we were having a fascinating chat. I said, I noticed that up there, you've got the PlayStation 5 boxes up there. Do you have these in stock right now? You're asking $750 a game. He says, no, we don't have any in stock. I said, you got to be kidding me. I said, you can't be serious. How long has it been since this game came out, since this console came out? Oh, it's going to be 2 years this fall. 2 years. And you haven't had them in. No, 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 we're not. So how does this work? I said, do you take names from people? He says, no, we don't take names. No. What happens is about every week or two, we get a shipment coming in here. I get about a 24-hour notice that I'm getting a shipment of games, of consoles, PS5s. And I don't know how many I'm getting. I get 20, 25, 30. I might get up to 40 at a time. It's all allocated at head office for GameStop, and then they ship out to our stores what we're allowed to have. And the games come in, and I have people who call here every day on the telephone. Do you have any PlayStation 5s? You got any PlayStation 5s? Got any PlayStation 5s? And when they're in, I say, yep, just got 20 in this morning. And can you hold one for me? Nope. First come, first serve. I'm on my way. And people come whipping in there as quickly as humanly possible. Scoop up one per person, only one per customer. And you come in there and you're not a card holder. You know how they have those points, that membership club. You become a member to be able to buy a gaming system. You have to join the GameStop club they have. I forgot the name of it, and that means they now have your email address and your address, and they double check in their system whether you've bought a game before to find out whether you're a scalper, because they don't like selling to scalpers. Now, what happens is, from time to time, the manager says, well, what happens is, Bobby comes in, and he buys a game. And then the next hour, Bobby's brother comes in and buys himself a game. And then Bobby's little sister comes in and buys herself a game. And then the next afternoon, Mommy comes in and buys a game. And then Daddy comes in and we know what's going on. We know that Bobby is a scalper, and he's offloading these PS5s for more money on the internet because you can't get this game anywhere. It's not in stock. It varies. He says it's changing. Bruce. This was the game a year ago, and about 6 months ago, this is no longer happening. People who are coming in here getting their games are gamers, and they're getting it for themselves because you can't flip them as easily as before. Because before you could get 200, 300, 400, 500 more on the internet for the same game. You just flip it. They can't flip it like that anymore. It's been almost 2 years. But at the moment, we don't have a single game in stock. And if you want one, you have to buy the game as a bundle. It comes with all kinds of accessories, including a game you got to take. And I guess there's a list of games. You have to buy one of these games. Otherwise, you can't buy it from them. Margins, 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 and margins. I said, I assume that these are going out at full price. Oh, yeah. Oh, Bruce, there are no discounts here. I don't care who you are. There are no discounts. We get full price for every PS5 out the door. I said, wow, that is awesome. I said, I'm really happy to hear this because on my channel, I have a group of diehard viewers that watch me all the time about GameStop news. And this isn't anywhere. This news isn't available anywhere from a corporate release. The company doesn't speak. So this news is really inside stuff. This is great. Right at the retail level in Canada. In Canada, of all places. Little old Calgary, Alberta, and Western Canada. We're not even talking Toronto. Here in Western Canada, PS5 show up, and within 24 hours, they are gone. Hello. Now, if he brings in 40 or so, it takes a day and a half to 2 days. Like such a problem. $30,000 in retail money comes into this location if he gets 40 games. $30,000 in 24 hours. What would I have killed? Would I have killed to be able to do that in my sports store if I could bring in NHL hockey jerseys that I knew would instantly sell the minute I got them in the front door? And I'm getting in a shipment once a week or so. I know that in the month I'm getting 2 shipments that will bring me $30,000 a shipment in retail money every time. I know I have $60,000 a month in guaranteed revenue from these gaming systems, from hockey jerseys or whatever it was I was selling as a sports guy. Yeah, would I have killed to be that guy? Well, here is GameStop with their 4,200 stores around the world. And it sounds to me like PS5s are still not in stock, which means they're not in stock at Best Buy. They're not in stock at Walmart. Whether they take your name or not, I have no idea. But at GameStop in this location, we don't take names anymore. No, it's first come, first serve. So if you happen to walk in the door on a Tuesday afternoon at 4, and we got a shipment in this morning at 11 o'clock, and by 1, we got them unpacked, you can buy one right here, right now at full price, 750 Canadian, right there. If there's price increases, they pass it on and they get it. There is no inventory. Nothing is collecting dust in that store from a PS5 point of view. I said, what about the Microsoft game, the Microsoft Xbox? Oh, we got those in stock. Yeah, it's been 6 months, and we have stock now. We have stock. So I said, oh, so that game is over. Oh yeah, he says the Xbox Flip game is over, but the PS5 continues. Sony with the PS5. I said, don't you think there's a new one coming out? He says, next year, a year and a half from now, they'll bring up probably the next version. It's unbelievable. He says, it's just unbelievable. The chip shortage has created this backlog. They can't make enough of these games. Now, you heard and you hear all the time about these analysts in Wall Street that poo-poo GameStop and its existence because the entire business is going online. It's going online. And the so-called console thing is exactly like Blockbuster and VCRs and VHS tapes and eventually the CD disc, all dead because everyone does Netflix now. Do you think that if a bunch of Blockbusters were to show up in your hometown and you could rent CDs for 99 cents for the week, like a week, and you could buy a brand new CD player to connect to your monitor for $29.99, how many people in your town would do that rather than buy a Netflix membership for $16.99 and buy a membership from Disney and buy a membership from so-and-so and so-and-so? Don't you think that a certain number of Blockbusters would work out? It would work out. And if they had a drive-through drop-off system, how handy is that? How about a drive-through pickup system? Or how about if Blockbuster were revived and they had a website and they were to drop off your 5 CDs at your house on Friday afternoon and pick them up on Sunday night? Do you think they'd make it? They might just make it. I don't know. They sell popcorn in the store. They'll find other ways to merchandise and make money. I don't know. They're just gonna get. Why is GameStop still alive? Why are the 4,200 stores still in business? The thing he also told me that was interesting was Calgary had, I think 10 stores. Now they have 8. So they said we dumped off 2 of them. 2 of our smallest stores were let go. Hi, Jen. What do you need?
The password.
Oh, well, got you. Here you go. You got it. New internet. We dropped off 2 of our GameStops, the manager said. Both were making money. Both of them were making money when we closed them. But both of them were sucking money out of the larger stores. So the company decided, well, we'll dump 2 of them, keep 8. And they looked at their total numbers. We make more money. We're making more money net because we only have to pay rent 8 places instead of 10 places. We have no new staff. We have just as many staff in the 8 as before. We just have more business at the 8 locations. This is happening across all of GameStop's network. This has been going on for over a year. This is why you're noticing the sales of GameStop are actually rising because of the online presence, which is growing, And these gamers are all members. They're all GameStop members. You can imagine that when a new video game comes out, every one of these members gets an alert. They get an email alert through their email systems, through their systems, through their consoles. You can pre-order your new game through GameStop. Come on down and pick it up tomorrow or Thursday or Friday this weekend. Pick up your new game of blah, blah, blah. Order it now. Smart. This is Ryan Cohen. This is Ryan Cohen taking this thing to that next level. And of course, all the other stuff they're up to. So this is good news. This is smart and interesting news from GameStop right at the ground floor level of a manager of a store. There is no mutiny in his store where people are walking away and quitting in frustration. He said, we don't have that problem here. No, we all love our jobs. We love working here. We don't want to quit. We love working for this company. It was really, really interesting to see this guy and have a chat. There was no appointment. I just walked in. He didn't know me from Adam. And we got to talking. And he realized I knew what was going on with GameStop. I knew what was happening at the corporate level. And so he and I just synced in. It was very, very interesting. Anyway, there you go. More news about what's happening at GameStop, and most interesting news about what's going on at GameStop. This is fascinating stuff. Never a dull moment in one's life. I'm supposed to be taking a day off yesterday. This was supposed to be my day off, Saturday, Sunday, not to be, not working and just relax. And here I am. I'm working for you people at a shopping mall on a Sunday. That's how much I give. It's incredible. We're shifting over now to members only commentary during the show. Thank you all so much for being followers of this channel and supporting us as you do. I really appreciate it. Please become a member today of this channel and join us here and make live comments right over here. I'll be happy to answer questions during market trading as best I can. We're opening in 3 minutes. We're about to start trading for the day. We're up at the moment. I'll tell you how the markets look. I got the Dow up 315 points in the pre-market. I think is that right? No, that's not right. I apologize. That's the close on Friday. Yeah, we're down 160 points. Okay, we're back. We're down 160 on the Dow. We're down 28 on S&P. We're down 74 on NASDAQ. That's what we got going. Welcome to August. Now it's reflection time. Were we crazy buying these shares the last week of the month, or should we have not been buying as much and as aggressively? There's that going on. I do note that the Dow in the last couple hours has definitely taken a spill lower. Half a point. S&P down 0.69. NASDAQ down 0.57. Look at the oil market. Look at crude oil. Remember I was telling you on Friday when the price of crude was going up, and I mentioned to you on Friday that it is possible that the crude price was rising because we were coming to the end of July for the end of the July contract, and it was almost cash. And then don't be surprised if on Monday or Tuesday or Wednesday, the first few days of August, crude might drop back down again because we're now into the August contract that will expire at the end of August. We're down $4.50 a barrel right now on oil. We're at $94.10. You know what? We were around $94, $95 a week ago. Welcome back. Well, welcome back, Cotter, as we used to say in the 70s. Welcome back, Cotter, to where we were before on oil. Now, there's the pundits are out there saying, the pros, this is U.S. dollar strength. There's a weakness in the dollar, and no, it's the contract rollover. And then there's the pros, the experts go, well, there's going to be a huge oil shortage, and people are going to be paying a ton of money for oil and gas going forward. No, we're drowning in this stuff. It's everywhere. If there was a shortage, we'd know about it. We'd see it. There would be physical lineups for people buying gas where there are the most pickup trucks. Okay. This is where it starts. Okay. America and Canada, If there's a gasoline shortage, the gasoline shortage starts where people buy the most fuel at a time. And those who buy the most fuel at a time drive the most inefficient vehicles with the biggest gas tanks. That's all it is. It's nothing complicated about it. So here in Calgary, Western Canada, pickup truck central. We got more pickup trucks per capita here than I bet you anywhere. But I'm going to guess Plano, Texas, and Austin and Houston. You got trucks. You know, and I know we know what we're talking about. Denver's got pickup trucks. Wyoming's got pickup trucks. Well, that's where the shortage would begin. The furthest away from a refinery, where the biggest purchasers of gas are located, that's where you get the shortages. And there's no lineups anywhere. There's no lineups in downtown Philadelphia for gas. There's no lineups in Pittsburgh. There are no lineups in Vancouver. There's no lineups in Toronto. There's no lineups in London, England. There's no lineups in Berlin. There are no lineups. There's gas. How much gas do you want? The gas stations are quiet. The only gas stations that have any kind of a lineup, and in Calgary, I can swear to it, Costco. Costco gas stations have lineups. There's only one reason why Costco gas stations have lineups. They're the cheapest price per gas in town. That's the only reason. They're about a dime a liter cheaper, generally speaking, than most other gas stations in the city. About a dime a liter. Now, what is that? That is 47 cents a U.S. gallon cheaper. 4.7 liters per gallon. No, 37 cents, 3.7. 37 cents a gallon cheaper to buy from Costco. Now, is your Costco in America 37 cents cheaper than your neighborhood gas stations? I don't think it is. I think in America, you go to a Costco to save a dime. You guys are getting a dime off gas if you go to Costco or maybe Sam's Club. And there's a lineup for this stuff. There's they got their 16 pumps or their 24 pumps or whatever, and they're just lined up to buy this stuff. It's insane. We are our worst enemy when it comes to fuel prices. We use too much of it, and the oil companies, they know it. They know we love the big fat V8 and all the bells and whistles and all that horsepower and torque, and we need it about 5% of the time we have the vehicle. The rest of the time, we're just going for groceries and going to McDonald's and going to Target and going to Costco to shop. And then we burn it up. We just burn it up. That's the story. Anyway, we're down $4.50 on oil this morning in West Texas, 94.10 at the moment. All right. We're open. I think we're up and running. Larry isn't here. We are relying on anyone else to hit the bells, and no one hit the bells, but we're open, and here we are. We are off at the moment, as we should be. We were down in the pre-market. We got the Dow down 179 right now. 179 at the moment. Pfizer up 17 cents. Matterport down 15. Smart Rent down 24. Tesla's up $9, 920 at 900 a share. SoFi down 16. GameStop up 16 cents. Spire up a penny. These are the first 3 minutes. Quotes. Apple up 87, down 87 cents. Pardon me. 87 cents lower on Apple. AMC down 16, ATIP down 1.5, Rocket Lab down 16 cents, Xterra down 34, ME down 2.5, Google down $1.62, HBQ down 27 cents, Cisco down 55, Twitter down 41, Home Depot up 73 cents at 301.67, Carvana down 73 cents, Robinhood down 32, Vanek is off 317, IBM up 4, Microsoft down 262. Goldman Sachs down 397. United States Steel, U.S. Steel down 50 cents. Meta Platforms down 276. Amazon down 84 cents. Bed Bath Beyond down a dime. BlackBerry down 12. Royal Caribbean down 249. Issuing debt, saying it's not dilutive to the shareholders. We're down 247 on the stock. No one's believing that. Target up 443, JP Morgan down 168, Costco up 293, Walmart down 18, Nvidia down 95 cents, Disney down $2 to 104. DeSantis keeps messing with the mouse. What's he doing? American Airlines down 12 cents. Netflix down 280 to 222. Moderna down 162. Boeing this morning, BA up 555 to 164. This stock was looking like a lot better earlier. There was talk early this morning in the 170s. Now we're 164. Boeing will still be grinding it out to try to make it work. They've got so much backlog to unload. They're going to take a while for them to totally get it together. But hey, at the moment, up 550. I don't know if it'll last, but that's what I got. This is the first 5 minutes of the opening. Welcome one, welcome all. You want to make money in this market? Simple way to do it, write options on your stock. Do not be afraid of the upside. There is no upside, not right now. Yeah, July was a good month. Yeah. How much did we gain? Not a lot. How fast can it be evaporated? 2 days. That's all we got. The stocks can go down a lot faster than they go up. We're down 150 on the Dow. Nothing serious. It's okay. It's not the end of the world. But the economic forecasts and the unemployment numbers coming this Friday, we'll be watching very closely the indication of how this economy is slowing up, because it is. It is slowing up everywhere. Canada, US, Europe, everywhere. Asia, definitely. We are slowing down. And the question now, is it a soft landing or a hard landing? What do we got going? That's the deal. 150 is the down dip on the Dow. 29 on S&P, 80-point drop on NASDAQ. All the indexes are down about 0.5 to 0.7% right now. Oil down 450 to 94.10. And that's what we got going on. Tesla signs battery material deals in China. Shares are rising. Now, why would China make a deal with an American-based company called Tesla? Simple. Because Tesla has a gigantic factory in Shanghai that employs a billion Chinese people, along with all the parts manufacturers that deliver parts to that Tesla plant. It is a big deal for China to make a deal with Tesla to allow them to keep making cars with batteries. China isn't stupid. They might be communists, but they're not dumb. They know, we'll supply batteries to these guys. They can keep people employed in Shanghai. This might even encourage Tesla to consider building an expansion to this plant, maybe double the size of the Shanghai plant, and really score a major gain in production. This will allow Teslas to be produced and exported through all of Asia, keeping South Korea out of the game, keeping Japan out of the game. Will keep the Tesla manufacturing in China, supply all of Asia with Teslas, and also in India, Pakistan, and perhaps the Mideast. Might be even in inventory going to Europe, because the Berlin plant is still only just ramping up, and it could take another 6 months to a year to fully get functional. And it's a big plant. Sure, Berlin is big, but it's not like Shanghai efficient. Going to be interesting to see how this plays out. Batteries are needed in Berlin too. Batteries are needed in Austin, Texas for its new plant. Batteries are needed, of course, in Fremont, California, and on it goes. Interesting. Tesla is higher, up $25 a share higher at $9.16 on, I guess, this news. I'm assuming. The Dow down 180 at the moment, 180-point drop on the Dow Jones. We're down 29 on S&P and 80 points on NASDAQ at the moment. Welcome one, welcome all to this show. Welcome to the channel. We like to talk about the stock market in plain English as much as possible to try to figure out what's going on. We sometimes know, sometimes we don't. We got Spire at 153 up 3. We got ATIP at 103 down 2 centinos. ATIP, I believe a number of our former SPACs that we follow here will be releasing results this week. They'll be coming out this week with their financials. I'm curious to see what ATIP has to say for themselves. Their stock has had a rough month. While the markets have been having a great time going higher, our friends here at ATIP, back on July the 7th, they were 167 a share on July 8th. Now 102. We have no news that I'm aware of corporately I got nothing. I do not know. My guess, and I'm going to guess, this is a wild guess, but is it possible that now that it's been so much time since the SPACs became de-SPACed, is it possible that in the last few weeks that ATIP shareholders, maybe hedge funds that bought a bunch of pipe financing stock at $10 a share, that these guys are getting wiped out by other bets that they've made, and they're selling whatever they can sell, whatever gets freed up for trading, and maybe ATIP shares were there was a release of some kind of a release of stock that these guys were able to sell it, and they're just desperate for any cash from anywhere, or were they forced out? Again, I don't know. I have no one at ATIP calls me to tell me this stuff. I'm in the dock here. Kind of like that guy, that Al Pacino character. I'm in the dock. So I don't know what's going on. 102, unbelievable to me. I know that the physical therapy business is booming. I know the physical therapy business is desperately trying to handle its clientele. I know that ATIP is opening up new locations left, right, and center. They've got the money to do it. They got the bankroll to do it. They're expanding their business. They're hiring therapists as much as they can. I know all that. So it's all positive. Growth. The stock's down to 102. Anybody know something I don't know? I don't know. Let me know. I'd pass it on as much as I can. There's no news. We're down 136 on the Dow, 29 on S&P, 80 on NASDAQ, 450 drop on oil from what I am seeing here. Let me refresh my big ass iPad and see what it's showing now. We're down 550 on oil. 550 on oil, 93.15. The Dow now down 122, S&P down 19, NASDAQ down 55. And stocks are waiting for something as pause follows July gains. Boeing stock jumps as 77 deliveries can resume. These are headlines. What else? A Black Knight sees record slowdown in home prices growth in June and biggest jump in inventory in 12 years. Higher interest rates, right? And tighter supply of money. Tighter supply of money can crush real estate, because real estate is a capital eater. It gobbles up huge amounts of capital. You might need 40 or 50 grand for a car loan. You want to buy a house in certain towns up to $1 million. You might need 800,000 of mortgage. That is eating up a lot of available cash. And that cash is saying, I'm available for rent. I'm happy to be part of a mortgage, but I don't want to come out at 2.9% interest anymore. Sorry, no. I need 5.9 because I can get better rates elsewhere doing other stuff. So pay me. And so mortgages are skyrocketing in expense and in cost. Housing prices are beginning to top out, maybe will decline, and inventory is coming on because sellers wanted out last year. They didn't sell when they could have. Now they're coming into the market going, oops, the demand is backed off because the rates have gone up. Here we go. That means only one thing, lower housing prices, which could mean lower housing starts, which could mean a recession in the housing department. China is in a crash right now in the housing department. Absolutely scary stuff. I don't know. We'll see what's going on. Here we go. Coyote, I got some GameStop ready to write as well, Alberto. There we go. And my arms are folded right now on GameStop. What is it doing? It's up 36 cents. GameStop, $34.37. Now 34.51, up 50. Volume on the day today is, I'm not sure if this is accurate. It's showing 3.9 million. Is that accurate on GameStop? I'm not sure. I think it's 101,000. Kind of waiting for my phone to wake up. Yeah, 377,000. Here we go. 377, which is what, 90,000, 92,000 from the old days. So this is dead quiet. We're up 45 cents to 34.46. The high of the day, 34.74. Low of the day, 33.80 on GameStop. We have SoFi right here at 620 a share, down 11. The range 615 to 637. Volume is taking its time to tell me, isn't it? There it goes. It can't be 13.9 million. No, that's not accurate either. My phone is not working well on the quote today. At least my device on the phone is not working too well today. So we'll keep following this market as best we can, but don't trust those numbers. Let's take a look over here. 1.7 million looks like Market Watch is what it's telling me. 621 right now on SoFi. 621 down a dime with a 628 high and a 614 low. Okay. Pfizer up 36 cents to 50.86. The Dow down 101. We've got other indexes off as well. We're down about a third of a point across the board on all three indexes. It's not a big drop. It's not a serious drop. It's a tentative drop. But I don't know if we're going to have much of a run here either. We're not seeing the kind of news that would make pension funds and hedge funds and ETFs get nervous about, oh, I got to get into this market. They just don't feel this. They don't see this happening. Alex is here at number 136 thumbs ups. Alex, how you doing, buddy? Thank you for the thumbs ups today. Thank you, all of you, for thumbs ups. We've got 139 going here. We only just started trading. I appreciate that. Welcome one, welcome all. If you want to make money in the market, you got to write options. I'm coming back to that topic. You got to write options to make money in this market. And you got to write into strength and find it, and you hit that option board. Anyone writing options last week on SoFi? There are some of you brave souls out there who are writing $7 calls and 650s and so on. We're at 620 this morning. Earnings coming out. Isn't it this week? I sure hope it's soon. I want the stock to go up. It's not like I want it to stay down here, but anyone who's writing options has been making money. Alberto, GameStop expiring options August 19th at $33. My arms are crossed. I'm not worrying about it. We're at $34.78, up 77 cents. Not enough volume to hold these moves, but that's what we got. Hey, Alex, wasn't the lamp behind you on the other side last week? First, there is no lamp behind me. I don't know what you're looking at. I don't know what you see, but there is no lamp. Maybe things were inverted last week. Maybe there's a window here where there used to be a window there. Maybe things have changed. I can't say. Some of you are on stimulants. It could be your coffee, could be what's in your tea. I don't know. I don't judge. I just say, folks, whatever you're into, you're into. All I'm doing is just trying to stay on top of these markets in plain English and let the chips fall where they may. Olivia, number 139 on the thumbs ups. Welcome. Touch grass. I got 33s for August 19 too. Agioti, SoFi earnings tomorrow. Alberto, BA popping, almost time to write. Might be time to write. Yes, it might be time to write out of the money contracts on the BA. Take some money. That can't be a lamp. It's too straight. There's no way you have a lamp behind you, because if there is a lamp behind you, it's a perfectly straight perpendicular. You don't have lamps like that. You've never had anything that resembles a possible lamp. These are interesting observations. I got to say, the lamp moved. It used to be more crooked. Nice touch. Touch nice. Let's get this moolah. Karim, do you guys get like the week-long price at the hotels, Uncle B? Well, we negotiate long-term situations. We were able to negotiate a good deal here for this room for a little while, and we're happy about that. As with some of us are on relaxants, got to be with this crazy market, Chip, says Goody. Alex, I kind of wish I was on stimulants myself. Alberto, Alex, laughing away. We're down 107 on the Dow. We're up 63 on Pfizer. That's a Dow component. Matterport down 13. Smart Rent down 32. Tesla overall doing well, up $31 to $922. SoFi down 7 now, 624. We've got GameStop up 80 at 34.81. I think we're near the high today at 34.83 or something. 34.90 was the high. And we're just around that neighborhood, just short of it. We'll see what it has in it. 80-cent gain. That's like 320 from before the split. This is nothing. This is not good performance. It's 522,000 shares traded. This is 130,000 shares traded before the split. Deadsville, yeah, you cannot sustain this pricing. Spire up 5.5 to 155.5. Apple up 15 now. AMC up 4. ATIP now down 1.5, coming back at 103.5. Rocket Lab down 9, Cyxtera down 43, ME unchanged, Google down 85, HPQ down 15 cents, Cisco down 42 cents, Twitter down 46, Home Depot up 160, Carvana up a nickel, Robinhood down 33, Vanik up down 133 on Vanik. Where's that Vanik? Where are you, Vanik? Come on. Stop hiding. There you go, down 122 on Vanik. IBM up 23. Microsoft down 239. Goldman down 214. U.S. Steel down 48. Had a big day on Friday. Meta Platforms down 213. Amazon up 92. Bed Bath Beyond up 12. BlackBerry down 8. Royal Caribbean down 379 to 34.92. Target up 320 right now. We've got JP Morgan down 187, Costco up 640 today to 547. Costco's had quite the run. The low of the year, 406. That wasn't that long ago. 406, I think, was around May 20 or something like that. We were down there. And now 547. This is a real pop. But you know what? This sucker is trading at 43 times earnings. I cannot justify holding a stock in my portfolio at 43 times earnings because there's no way Costco is going to quadruple their earnings this year. That's not going to happen. Okay. There's no way. So something here isn't right with the world. It's up there. I grant it. It hit a high of 612 in the last year, not lately. 406 for the low. It pays a dividend of 2/3 of a percentage point. So you're not holding it for the dividend. But the PE multiple, 43 times, guys, girls, I'm sorry. Folks are chasing a dream here. It's too high. Walmart up 189 to 133.88, 28.8 times earnings, too high. Nvidia up $1.80, trading at 49 times earnings, way too high. Not in this market. No way. No way. Disney's trading at 70 times earnings. Yikes. Really? You got to be kidding me. I don't know, man. Up a nickel on American Airlines. They don't make money. Netflix up 130, down 137, trading at 20 times earnings. That's where it should be at best. That's where it should be. $2.23 a share, 20 times earnings. This was at one time a $700 stock, probably trading at 50 times earnings. Now trading at 20 times earnings, kind of back to a more reasonable level. It's ugly, but that's what it's at. Oh my gosh! All right, back to the markets. We're now on the Dow. We're down 71. We've been climbing our way back a little by little after opening lower on the day, trying to bring back this market. I don't know if it's going to work. NASDAQ has gone green. It's up 5 points. Make it 10 now on NASDAQ. We're down 8 on S&P. We're down 41 on the Dow. So we'll see if this can last, if this has any staying power to it. Oil down 439, still under at the moment. GE price target cut to 105 from 120 at Bank of America. Interesting. Apple plans to sell bonds to buy back stock. Headlines at Barron's. There you go. I don't know if we know how many. What are they doing here? They want to gearing up to buy stock in four-part bond offering, they say. But we don't know how much. Yeah. They don't know how much. They don't know how much they're raising, and they don't know what the interest rate's going to be. So, I mean, and yet the street is happy as can be. Oh yeah, that's great. Apple bonds. We love Apple bonds. Great. Taking money away from everybody else. But hey, it is every man for himself in this business. Nothing personal. It's just business. And so there you have it. 41-point drop on the Dow, 5 points on S&P. We're up 16 on NASDAQ. Okay, there's where we're at. We have 151 thumbs ups. Thank you, everybody, for these thumbs ups. I appreciate it. GameStop is zooting. It's going zzz. GameStop is right now 35.52, up 150 a share. That's where we are right now. And let's see. Stop keeps going up. I'll just keep rolling it over. Exactly. That's exactly how we do it. GameStop, I hate you. Give me a dip, will you? Huge green candles on GameStop. Well, start the week off with a little move. Fair enough. Whatever it wants to do. We're easy going. Welcome all to the show this morning, and the merriment and the craziness and all the other stuff. It's great to have you here as we are watching this wacky world. There's inconsistencies everywhere with economic figures, and yet certain markets are higher. I don't know. The FTSE in London really backed off. It was up a little bit here. Now it's almost negative, virtually unchanged. The Germany is London is negative now. Pardon me. Germany is almost negative as well. It's turned around. France is about to go negative as well. These markets have really backed off in the last hour. Something is not good over there. There's a lot not good over there. That is the reality. Actually, there's a lot not good over there. That's plain English from here. I'll tell you that. That's my plain English speak. Yeah. Europe has got energy problems galore because of Russia, the Russia issue. But they're standing firm with Ukraine. 152 are the number of thumbs ups on this show today. Thank you. Thank you to Little Little Chaos for becoming a member today. Thank you for joining up. It's great. Love, nice to have you here. And thank you all of you for hanging tough with us today and following us here on this interesting opening day today. 35.42 now on GameStop, up 141. The high of the day, 35.63. Right now, 35.40 is where we're at. So stock tries to get some kind of a higher trade range going if possible. At 35 means it's $140 pre-split. That's 140. Obviously at 30 that's 120, and at 40 is 160. So multiply by 4, you know where you were. Right now we're 35.35, up 134, but the volume is not that stunning. GameStop volume right at the moment 828,000 after the split, 200 and about 9,000 pre-split. So that is not earth-shattering volume at all. Okay, so we'll keep that on our screens. We'll keep an eye on it as we always do. GameStop, we watch closely. That news I heard this week, this info I got this week was interesting. I have to admit, they seem to be at GameStop executing on a plan to keep their store counts at around 4,000, 4,200. That seems to be it, from 5,500 down to here. Consolidating inventory and all that. Keeping a tight hand on control on inventory. PlayStation 5s still not in stock. You come in the store and hope they have them. Every once in a while they get a shipment in, they sell. So they're getting full margins on these systems and accessories and the game. They're forcing you to buy the whole package, and they're getting it. And this is adding to their ability to pay their rent and salaries and break even at retail or make money. That's what's happening. And now everything else that GameStop is doing is the question mark. Will their e-commerce division really work out for them? And if so, how? Um, and can it add to the bottom line? And that's what we want to hear. We'll find out in a few weeks when their next set of financials are released. Anyway, there you go. Uncle, should we be buying our contracts on SoFi due to the expected positive earnings? The call that's coming tomorrow. Well, I can't predict it because I've seen everything happen here. I have seen it all. I have watched the stock plummet on expected great earnings. I've seen the stock plummet after great earnings. I've seen the stock run up on no news whatsoever. I've seen the stock run up on rumors that the earnings are great. I've seen the stock run up on the new numbers of members joining the company and all that. And so there's no rhyme or reason to this market. I can't put my finger on it. It's obviously higher than the low of the year, which was 482. That's occurred, but we did just have a price of the stock substantially higher than this in the last month, and we've given up ground during July, which was a great month for the markets. Apparently, historically, we did hit 706, 7 something back in July 2021 range, and here we are at 626 again. Obviously, July 1, it was 532. So from a month ago, 532 to 626, not a bad move. Now, should the stock stay down here? I don't think it should, but will it? As they're not asking me for permission to do what they want to do. This is the question. If you've written calls and you've made money on calls, fantastic. If you have calls that are out of the money, the stock has to go a distance before you're, quote, in the money. You could always do rollovers. But look, it's your call. Are you happy with your returns? Right now we're down 7 again, 624. The SoFi range, 629 for the high, 614 for the low. We're at 626 here. 3.8 million traded. We are not trading record volumes or anything to concern yourself about with regards to, the volume is telling me it's going higher. No, it's not. That volume is not telling me that. But is the stock going to be holding here because the earnings are coming? Will it be a disappointment because they'll release better numbers, but they're not profitable yet? We're not expecting profit yet. But could it be that investors will be impatient with the stock starting tomorrow or Wednesday or Thursday because although they're not making profit yet, and they're going to make profit in the future, but it's too long in the future and they're upset and they're going to get out. Like, every human emotion is involved here. And welcome to the stock market, the home of human emotions. It's it. As an option player, you just have to be disciplined and say, I don't think the stock's going to $10 this week. But even if they did run this sucker, I'm happy because I'll roll my contracts into 1250s. So run, baby, run. In the meantime, I got options. They're depreciating. Stock's now down a dime here. They're depreciating. And if I get a stink bid hit, I'm a happy guy. And if they want to go up again, I'll write new contracts. So Alberto, I'm throwing you every possibility that you're probably going through right now. And I'm not giving you advice because I can't. I can't tell you. I'm not the guy who knows. I'm just seeing what I'm seeing, and today we're down. That's what I see. Day before earnings, we're lower. So read into that all you want, but that's what I'm seeing. 35.16, by the way, on GameStop, up 115. The high was 35.63. I now see it at 35.07. GameStop is backing off right now. Kiwi, I'm number 154. Thank you, Gary. I wish we could have seen what the bank charter did for the stock before the market slid. It ran $2 on the news when everything was coming down. Would have been fun if it came during momentum. Pick nose. Can't catch a break on GameStop. Been on the sideline for a bit. Well, like I say, it's up today, so you can write options on GameStop now. I mean, write 36s for this Friday if you want, just for this Friday. Dare the stock to take you up. Get a premium. Stock backs off to 34.50. Buy him back for 50, 60, 70 cents less. Make some money. Alberto, put on your aluminum tinfoil hat, please. Thank you, Uncle. I'll do what I can. Just, what can I say? SoFi down 7 at 624. Pfizer down up a dime right now at 50.61. The Dow is only off 7 points, and we were up just a minute ago. We're off only 7 on the Dow. GameStop 35.15, 35.20, trying to come back again. Will it, or will it give up this gain and drop more? Is it now going to have a series of drops for the rest of the day? I don't know. We're here. But you want to write an out of the money contract? Good time to think about doing it. GameStop now. Yes, right. When should you write contracts on GameStop? Now. Okay, how about that? Is that enough of a hint? Now to write contracts on GameStop? Immediately? This second? Hurry. SPY Green now, buying pressure happening. Sell. Write contracts. Write contracts. Apple is selling into this market by issuing bonds. That is a way of telling you they're selling. Sell. Wall Street won't tell you. Will never tell you to sell. We're up 79 on the Dow. Right options. Sell into strength. Yep, hit these guys. Okay. Tesla up $34. Shorted. Short Tesla. 926. Not justified here. What can I say? 628 on SoFi. Down 3. GameStop 35.36. Up 135 right now. That's where we're at right at the moment. We're having fun till Daddy takes the T-Bird away. Will Daddy actually do that? 35.27 now, 35.25 on GameStop, up 124. We're down almost 40 cents from the high of the day 20 minutes ago. That was quite a bit of a shot there. A little too much, too fast, maybe. Okay. Thank you all for popping in here. Other contracts you should write. Let's take a look. If you're writing on Pfizer, you're looking to write 52s on Pfizer for this Friday or next Friday or the Friday after that. My thinking, anyway. You write in when it gets into the 51, 52 range, you write contracts, you let it back off, you buy them back. Otherwise, you let the depreciation be your friend. GameStop, writing 36s right now would be a really good idea. 36s this week or next week, a good idea. If you can do rollovers, if you can roll over a contract you have now in GameStop, you can buy it for a very good low price, with very little premium on it. You can roll forward a couple of weeks at the same price or a little higher price for just as much money or more money per contract. Do it. Take a higher premium and grab them. If they're offering it to you, 35.07, the stock's backing off. Just keep an eye on those option chains. Apple 162.92. I'd be writing 65, 64. 64s for this Friday, 65s for this Friday, next Friday, 66s next Friday, the Friday after. I'd be going after some options now on Apple. I'd be doing it. AMC 15s, right 15s for sure this Friday, next Friday. What else we got here? Options. Google, 116 is where the stock's at. I'd be writing 118s, 120s for sure the next several weeks, for sure. Alberto, thank you for a donation on PayPal. Something happened. He made money doing something. You made money doing something. I love it. Who else we got? HPQ. I'd be writing 34s and 35s. And if you can roll 30s, 31s, and 32s into 34s, 35s, great. I'd be going after that. Cisco, 45.30 on the stock. I'd be writing 46s for Friday, 47s for next week or the week after. Twitter, we're 41.06. I don't know what to tell you. The trial's coming up in October, and it's such a mess. Home Depot 303.88. I'd be writing 305s, 310s. Going on here. Where else are we at here? Vanik Vectors, we're at 236. I'd be writing 240s, 245s, definitely. 241s, 2s, 3s, 4, 5. Anywhere in there, I'd be writing option. IBM 131.29. Yeah, 133 for Friday, 135 for next Friday, something like that. Microsoft 278. I'd be writing 280s to 282s to 285s between this Friday, next Friday, the Friday after. A Goldman 334 right now, 340s for next Friday, 338s for this Friday. Meta Platforms, we're at 159. I'd be looking at 162s to 165 for this Friday, next Friday. Amazon, we're at 137. We're up 277. 140s, I would want to be writing for the next several weeks out, definitely. Not worried about rollovers there. What else we got going on? Target, I'd be writing 170s. JP Morgan, 116s to 120s. Costco, I don't know what to tell you on Costco. $5.50 a share now, up $8. I don't know what to do there. Although I wouldn't be afraid to write 560s, and if I have to roll, I have to roll. I would take premiums here. Walmart 133, I'd be writing 135s. Nvidia 186, I'd be writing 190s. American Airlines, I'd be writing 1450s, 15s. Netflix 225s to 235s, I'd be writing those. I think we're topping out here. Moderna 160 a share. I'd be writing, or 162. I'd be writing 65s to 70s. Definitely. I'd be looking for premium here. 70s for 2 weeks out. That'd be all right. 3 weeks out even. Okay. Look at the Intel's up 81 cents. And so is the Micron up 179. Intel's up a buck. Wouldn't be afraid to write those. A couple of dollars out ahead of each of those. I'd be writing contracts for this Friday, next Friday. Boeing 169 right now. I'd be looking at 175s. A couple of weeks out, 175s. Yeah, dare them to come and get you. Dare them to come and get you. All right. We have the Dow right now up 58. We're not going anywhere. We're up 58 on the Dow. Okay. Pfizer up only 7. Tesla at $35, up $35. SoFi down a penny at 6.30. And GameStop up $1.08 to 35.09, 35.08, roughly. So we're right in that low 35 range, right here. Low today 33.77, 35.08 right now on GameStop. Okay, negative on the Dow. We're up on the Dow 51. Hang on, we're negative on FTSE in London, by the way. We're negative in Europe. We're coming up to the close in Europe soon, aren't we? Very soon, I think. Hang on a sec. I have to plug in my big S iPad. It's about to run out of juice. We can't have that. We can't have that. We need power, man. Let's pop up this thing. Let's get this in here. There we go. Boom. There it goes. Yeah, the Dow is up 46, 35.07 on GameStop. By the way, the Dow is up 46, and S&P is up 7, Nasdaq up 65, oil down 4.55 a barrel to 94.07. So that gave back all that gain from Thursday, Friday. It's gone. It's gone. Okay. All right. Construction spending fell sharply in June. Not good. U.S. factory growth at slowest pace in 2 years. Not good. Okay. That's not good. That the stock market should be freaking out about this. But the stock market doesn't get it at the moment. And I'll tell you one of the reasons why the stock market doesn't get it. The stock market is populated by a bunch of 45-year-olds and younger who haven't been around when inflation wreaked havoc with earnings and companies. Interest rates rising. They haven't had this in their entire careers. They don't know what to do. And so they're looking for dead cat bounces and recoveries in the markets and deals and they're calling they're certain that the bottom is baked into the market. They're certain and they're wrong. Wrong. Yeah, they're wrong. What can I say? I've been around too long. That's just it. There's not enough of me. I'm here, but there aren't on YouTube. How many other 65-year-olds are you watching on YouTube who've been around since the 70s? There aren't any. I don't think there are any. And in all the brokerage firms across the United States and Canada, all the investment advisors, have you ever met an investment advisor at your local bank, your local brokerage firm that is 65 years old? Have you met a 55-year-old financial? You don't get to see those guys. Those guys are senior VPs if they're still around. They're up at the top. There are no on the street level stockbrokers, financial advisors that are 55 and older. We have been terminated. We have been eliminated from existence because banks today and brokerage firms today are not interested in guys like me who have ideas as to why the market's doing what it's doing from experience. They don't want us on the front line. They want the 25 to 33-year-old kid right out of university who is trained to read the script, to tell you what they want you to hear. And that is the official line from the bank and its PR department and its legals. They just want you to keep buying, and they want you to let them manage your money for you. That's what they want. That's why you guys here are the rule breakers. You guys are the defiers. You are defying what Wall Street wants you to do. They would rather call an investigation with Congress to stop people like yourself from thinking for yourselves. They want Congress to make you use a financial advisor from Wall Street who will tell you, let us manage your money for you. You'll be just fine with your 3-4% return. That's what they want. And slowly but surely, they're tightening the screws on independent financial advisors. Just it's getting harder and harder to find them. And guys like me, all they're doing is waiting me up. The banks in Wall Street and Tokyo and London and Frankfurt, they're just waiting for us to die. The time will take care of me. Time will eliminate me from existence. And everyone else like me, sooner or later, we'll be gone. And the only financial advisors you're going to get are the robo-advisors and the young kids out of school who are desperate to impress their bosses and keep their jobs. They're on quotas to make 200 calls a day to find saps to get their money and manage it for them. That's the game. That's the game. It's been on since the 80s. It started in the mid 80s and really caught fire in the 90s and 2000s when every single regional and local investment firm was erased from existence by the big banks. All the national firms in Canada that used to be coast to coast, the brokerage firms, then the regional, they all got bought up. They either went under or they got bought out. And in good markets, they got bought up for big money. The thing was that family-owned brokerage firms that were national, they were able to do that through the 50s, 60s, and 70s. These folks were run by family members who were multi-generational. You had the granddad and his partners who started it. Then you had the sons and the partners' sons and other partners who ran it, and then the lower level brokers. And there were I was getting constant phone calls from guys I knew who'd say, have you heard the latest? Oh, what's the latest? So-and-so and brothers, so-and-so and sons got taken over by the, so-and-so Bank of Canada. They just bought these guys. And the deal is that the price for the company is $70 million. And it's $30 million up front. And it's $40 million over 5 years, $8 million a year for the next 5 years. And They had to keep all the staff, like the top 20% of the brokers, the top fifth of sales guys had to sign a 5-year deal, and they all got a big fat bonus check immediately. And then they were given annual bonus checks for the next 5 years not to quit. So these guys had to keep coming to work and had to keep their clients around because they kept wanting to make commissions. But after 5 years, they were cut loose, because in 5 years, the bank could measure which of these guys and girls to keep and which ones to dump. And that's what took place. So at the end of 5 years, there would be kind of a release of some people into the street. And these firms would either get gobbled up by the remaining independents, or these guys and girls formed their own companies because they got so much money as being bought out, that they would now pool together, get 4 or 5, and they would set up their own hedge funds. And this happened in Wall Street. This happened in Toronto. This happened in Vancouver. This happened across the US and in Europe. And eventually there were a bunch of independent type firms who were set up with their top clients, and they would set up hedge funds. And that's how it all began in the 90s and the 2000s. Things have changed. Yeah, that's right. Here you go. Coyote doesn't think it's people are pumping the market. It did a study last year, found that 89% of all U.S. stocks are owned by 10% of the wealthiest Americans. Well, there's some of these studies are kind of, keep in mind that pension funds and hedge funds and ETFs and all, they own a lot of stock, but who owns them? There's that too, right? Off and on. But don't forget, teachers, California teachers, and the New York teachers' pension funds, and the firemen funds, and the policemen's funds across America and Canada, they own a ton of stock. Now, you can call them wealthy, but they're just part of a big group of people who own these huge blocks of investments, billions and billions, if not trillions. Anyway, there it is. Got to make money. Alberto, Uncle, I got the 175s for the stinkiest of the stinky bid. 2 cans of Febreze ordered. Oh man, way to go. I'm assuming, Alberto, did you write those calls? You didn't buy them, right? You sold them, and they were stink offers, not stink bids. I'm assuming that's what you did. And of course, I'm proud of you, as I'm always proud of you. Well done. The stinkiest of stinky. I love it. I just love it. Fantastic. All right. Well, we're down 68 on the Dow. Don't worry about the upside. Sell into strength. We're down 68 points. We're now looking at GameStop 34.99. We're back under 35 on GameStop. We've got they got the Dow now 72 points lower. S&P down 8. Nasdaq only up 23. We're backing off quick again. We're down almost $5 on oil again. Yes, right. Yes, laugh out loud. Yes, I sold them, Uncle Bruce, and I hit the stinkiest of stink offers is what I got. Okay, got it. Kiwi employers get pilloried for taking on new staff at the higher rate and not giving loyal existing staff more, but people tolerate banks giving new customers much better deals than existing customers. I know, it's amazing. It's what can I say? There's a great on Instagram from time to time. If you're a Seinfeld fan, there are sites that pop up with little 20-second clips of Seinfeld over the years. And there's a great clip of Kramer going into his local branch of his local bank, and if they don't say hi or good morning, they have to give you $100. And he came in to complain to the manager that no one said hi to him. They just said, "How you doing?" Hey, they're using all kinds of slang rather than saying hello. And he wanted $100. And the character that played the branch manager called over the bank people and asked Kramer, would you excuse us for a second? We're just going to have a little meeting here and talk about this. And Kramer walks over to the counter, and then manager calls him back and says, so look, you got, we talked about all this. We went over it together, the staff, and it sounds to me like you got a number of greetings that started with the letter H, like hi instead of hellos. How does $20 sound? And Kramer goes, I'll take it. Banks offering deals. Deal done. I'll take $20 for not having been said to hello. Great clips. Love that stuff. What do we got here? We're down 37 on the Dow. Pfizer's up 52 cents. Matterport's down 4.5. SmartRent down 24. Tesla's up only 27. It was up 30 something. SoFi's down 4 again, and 34.90, 34.80 on GameStop. We're coming back. We're up like 80 some odd cents now. We've given up 80 cents from the high already. Another wave of selling has come into GameStop. That's what's going on. This market has no upward thrust behind it. It's unlikely it's going anywhere. Spire is up 9. Apple up 17 cents. AMC up 3 cents. ATIP is up. It's up 2.9 cents to 107.9 a share. ATIP is green, everybody. Hello. Rocket Lab down 4 cents. Sextera down 17. 23andMe is up 5.5. I feel like what's that uncle's name on Seinfeld? Uncle Leo. Hello. Oh my gosh. Gotta love it. All right. Still waiting, says Pick Nose. I'm still waiting to buy back my GameStop after being exercised on the stock. Just be patient. Just be patient. Don't worry about it. It'll come to you. Yep, it'll come. Right? Yes, I wrote, says Alberto. Alberto's getting pulled. Okay, Nazareth just sold a 38. Just sold 38 August 19. $36 strikes on GameStop. These calls for 205. My arms are crossed. So 38 calls at $200 a shot. $7,600 has just come in the front door in Nazareth's account. He's got a $36 strike. He's got a $34.93 market. He's $1.07 out of the money. This is beautiful. This is beautiful. Offering the stock at 36. If he gets taken out, he gets paid $38.05. On a $34.93 market. This is a good move. Nazareth, I like your style. August 19th, 18 days to cash in on 7,600 buckaroos. I like this deal. I like your ideas. I like your chances of making money on this move. When you sell a contract like this, you just know you're going to make money. You just know it. If this stock wants to drop to $34, of course, that'll speed up the money into Nazareth's pocket on these contracts. But as each day goes by, these contracts shrink. That's all-time value, 205. And what do we got? We got 5 days this week and 5 days next week. It's kind of a, they don't have a long time to live. 18 days. They're running out of time. So yes, the depreciation is going to be fantastic. Way to go, buddy. Way to go, Nazareth. You're going to make money here. Trucker likes it. I Coyote. Uncle Leo. Hello. Jerry. I just wrote 10. The 5th of August, $36 strike filled for 97 cents. This is a good one too. This dies this Friday. And he's received almost $1 for him. They're going to drop 20 cents a day in value. The time value evaporates. 20 cents, that's $20 a contract a day of shrinkage, approximately, times 10. $200 a day coming to Trucker Tech on average this week. Do you make $200 a day working for a living? Do you make $1,000 a week? That's $1,000 a week. Not bad. Way to go, Trucker Tech. Alberto Nazareth, nice work. Everyone writing calls. Well done. Take the money. We're down 109 on the Dow. We're not going anywhere. Pfizer just turned around. We're down 11. That's what that is. Tesla up $20, coming back. SoFi down a dime, going down. 34.82 on GameStop. We're dropping. These rights are a good idea, a really good idea. Taking money off that gambling table. Absolutely. Cheers to every one of you for doing this. I applaud you. Beautiful. All right, we're down 15 on the S&P. We're down 8 on NASDAQ. We've gone red again on all three indexes. Oil down 5.22 a barrel. Good news for drivers. And we're going lower on oil. We're going lower. All of this news is industrialist ISM indexes and this, U.S. industrial utilization indexes and all that's showing lower and lower and lower. That means less energy will be burned by these entities. They need less electricity. They need less of everything because they're backing off. This drops oil. And if this is global, this plummets oil. This crushes oil. And it makes it tough for the Russians because they're trying to sell oil on the black market for cash. It makes it rather difficult for them to offload a lot of oil for big money because they're already selling oil at a $30 a barrel discount just to make the deals. You drop this thing to 65 a barrel, they're getting 35 a barrel. You drop oil to 45 a barrel, they'd be lucky to get 25 a barrel. So yeah, not good. Uncle Leo, hello. Oh my gosh, so much fun. Thank you everybody for being here. Alex, the only reason I haven't already canceled my Netflix is because they've got Seinfeld. I gotta finish it first. Little chance, nice. I sold 10 August 5s, beautiful. August 5th 35s for 144 and 4 August the 5th 35 and a half for 145, hoping to keep all that money. Oh, that's a nice move. These are good rights, all for this Friday. The stock here 35.08. We're not going anywhere. This is a nice move. Zed, Uncle Bruce, I have 8 32.50 GameStops expiring this Friday, sold with a $3 premium. One, is that pretty good? Not bad either, because that's 35.50. We're at 35.08, 35.03. This sucker can be $34 this afternoon. It could be $33.10 tomorrow morning. Zed, you and I will be watching this as always. We always do. Very interesting. Well done, everybody. Just take these premiums. The worst case scenario, you got to do a rollover. Really? That's the worst case scenario? I got to do a rollover? That's your whole, that was your whole plan. Really? Get her? That was your whole plan. Get her? Yeah, this is it. 8 32.50 calls for Zed Estate. His worst case scenario is the stock stays around 34.50 a share, 35, whatever it's doing here. It's 34.96 now. And he has to roll over the contract. Oh, no. He's got to buy back this Friday's calls for book value. And he's going to have to write next Friday or the Friday after that for a fat premium. Oh, no. That's just awful. I'm being sarcastic. Making money, baby. Taking the money from the gamblers and rolling it. I like it. I like it a lot. 173 thumbs up. Thanks, buddy. Appreciate that very much. We're getting ready to shut down this show. I got to go have some breakfast with Auntie Jennifer. We got to go downstairs. Guys, thank you for joining us so far. We're down to 34.90 now on GameStop. The Dow's off 75 points. I'll be back this afternoon on this channel, 3 o'clock Eastern time. And on my other channel, Traveling with Bruce, I'll be on twice today, 7 o'clock for members, 8 o'clock for the general public on the big show. You're welcome to join us for those if you like, but come on around at 3 this afternoon. Let's see how this market performs the rest of the day. We'll catch the final hour together and see what this market has in store for us. A 565 drop on oil now, 92.97 in Texas. That is serious stuff. That is a hit. That is a real hit. I don't understand U.S. humor, so I watch British stuff. It's all cool. Tiff, thinking about possible rollers where selling a covered call is a good idea. There's also that too, my friend. Thank you all for hanging out with me this morning for a couple hours. I appreciate this. See you later, Cindy B. You got it. We'll be here at 3 this afternoon Eastern time. Come and join me then for the final hour. Let's see how this all climbs out, works out, falls out, ends out, and making money. That's what it's about. Option writers unite. Stink bids save lives. Way to go, Alberto. Nicely done today. Thanks for the donation as always. I will see you guys at 3 this afternoon for the final hour. Okay, take care. Bye for now.